Good afternoon, traders. How we doing out there? Who's ready for another stock market movers I'm your host, Money Mitch, ready to dive into the markets. A lot going on. There's pre-announcements, there's earnings, there's Fed outlook, natural gas. Tons of things are moving out there. So if something has your eye, make sure you throw it up in the chat so I can catch it and make sure we cover it right here on Stock Market Movers, where we give you the informational edge to continue moving forward with, of course, all the headlines in the intraday and 2 expert interviews every single day. Hit the thumbs on up if you guys are excited to get into Stock Market Movers. And let's go ahead. Let's dive on in. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch. Oh my God. Nah, I'm just messing with Aaron Bryan here, mentioned in the chat saying that I'm practicing expressing my emotions. This is the, oh crap, the market. All right, well, I'm just working on that. I'll continue working on that. Let's get into the headlines today. What is going on? What topics are we going to talk about? We got the Fed outlook. We'll talk about natural gas. We'll talk about Walmart retail destruction, Shopify, earnings. We got a lot to run through. NXP, UPS, GM, McDonald's, Coca-Cola, 3M, Raytheon. We got even a little, we'll touch a little bit on AMD. I don't know why that snuck in there, but I'll take a look at it. Coinbase, inflation, and the rest of the week. So keep your eyes on out. Of course, there's no earnings on AMD. I don't know why I snuck it in, but looks like I want to take a look at it. We'll do so right here on Stock Market Movers. Let's first dive in on natural gas. I think it's an important question that you start asking yourself. What happens to natural gas during the winter months? This is what I've been talking about on pre-market prep a lot. And I was looking for natural gas to get that next boom on up, right? And so if we take a look, what has been happening in natural gas? Well, in natural gas, we've had now, of course, mentioned from Gazprom's that it would further reduce flows through the vital Nord Stream 1 pipeline. It's operating right now at just 20% of the capacity. This is very important. There's the strong arm of Russia on natural gas right now. For a second there, they put the pipeline on full on there. And the big thing with that, and I talked about it right here on Stock Market Movers, would they pull the salesman move and give you something and then have it taken away? Because that's really when, as consumers, we get upset because we got something, it looked better, and now you're seeing it taken away here. So the question is now, natural gas is up more than 77% for the month, putting it on track for its best month going back to the contract's inception. Of course, we're talking about the futures since 1990. So if you guys don't know, that was the year that I was born. Aging myself a little bit here. But as you guys can see, natural gas has been a complete monster. Let's take a look at some of these charts like UNG. You guys can watch. Look at that recent move here. It's just been ripping, and ripping. So a lot of people thought that UNG was done when it was down here. I just saw mentions what? Pipeline can close up. Russia can strong arm. Well, then that leaves me questions that I could get right back up there during the winter months. And it didn't even take till the end of summer to get right back up there to the highs on UNG. So something to keep on watching is what happens in natural gas during the winter months. I'll throw it to the chat. What do you guys think? Do we get continued breakouts above those highs? Or do you think this will just kind of stabilize as we get into winter? All right, let's get out of the natural gas talk. I want to talk a little bit about what we're going to be watching tomorrow, right? I'll take the topics off here. Now, of course, big eye is all on the Fed tomorrow. We'll get the FOMC meeting. A lot of eyes on thinking 75 basis points, 100 basis points. But one thing that I will point for you guys is focusing on what happens at a faster pace of quantitative tightening. So if you guys don't remember, of course, the Fed planned to reduce 8.5 trillion balance sheet beginning June 1st. It first started with 30 billion in maturing treasury securities and up to 17.5 billion in mortgage-backed securities per month. That was the selling off of the assets. Beginning September 1st, this changes. Now the cap actually will rise to 60 billion and 35 billion for the mortgage-backed securities. And this giving the maximum potential monthly balance sheet roll-off of 95 billion. Something to keep on watch, right? The Fed ended the purchases only in March 2022. So it's been only about 4 months here. And of course, the last time this happened was 2017. That was the last time we actually really started pulling the quantitative tightening and selling off of the assets. Now, of course, there's 3 factors that you got to keep on mind here. The Fed's balance sheet is significantly larger this time around. And if you take a look, also, the economy is at a more advanced stage in the business cycle. So a lot of people are calling this a bear market, but of course, this could be the end of the bull market as you're seeing high inflation, lower unemployment, and a smaller output gap there. And the Fed is less likely to be uncertain now, as you're seeing what? You're seeing the focus of inflation is the first thing to definitely tackle down, and then we'll worry about getting the economy back up, because for right now, at least for the way the Fed sees it, this market is strong, so they can go ahead and kind of work that quantitative tightening. I think it's something to watch. Do we get more mentions of the selling off of the assets? Do they change the cap? That's what I will be watching, because I feel like that's something that most kind of just forget about. They always talk about the interest rate rising, but they don't talk about the selling off of the assets. So that's what's going to be on my radar tomorrow after we get that. Of course, at the FOMC meeting, the notes will come out at 2 p.m. The real fireworks come from the conference of Jerome Powell. That'll be on at 2:30. And you guys can catch it right here on Benzinga. All right, so that's what could potentially happen with a faster pace of quantitative tightening. Let's get out of the Fed talk. Let's dive into the retail aisle. So clean up in the retail aisle, clean up in retail, as the retail just gets swept today. If you guys are seeing retail stocks getting hit, well, I'll tell you right now, a lot of that is based on Walmart coming in with a pre-announcement. And you guys know I was actually bullish this. I'll show you guys this. I was playing this up towards the up gap, and it got actually through the up gap, but look at that. And then all of a sudden what happens? Boom, it guides down on profit outlook and just gets wiped out to the downside of the pattern. That's how this market is right now, guys. This is not the market where you want to be fighting the profits. This is more of the market where running to the profits has done me well. Like always, make your own risk assessment and reward points. But for me, this market is not the market to fight. It's the market to take that money and run the other way, and quickly, if that. So you guys can take a look here. Walmart coming on down there. What happened, right? So they went on and they lowered the guidance here. Outlook for Q2 and full year 2023. The company said operating margins are now expected at 4.2% for Q2 and 3.8% to 3.9% for the full year of 2023. The guidance cut was primarily due to pricing actions aimed to improve inventory levels at Walmart and Sam's Club in the U.S. and mix of sales. Comparable sales for Walmart were down here, expected to be 6% for the Q2, and expects adjusted EPS to decline 8 to 9%. So showing a really hard downturn and faster than the earnings, right? The pre-announcements is what we talked about right here on Stock Market Movers. If you guys are missing some of the things that we've been talking about, so a lot of that is pre-announcements coming before the earnings to kind of lower that bar, right? And so what did this do? It hit all retail stocks. So essentially all retail stocks just lowered the bar. That might come back in the long run to help some of these stocks. But for right now, they're getting crushed down. Let's take a look here at what's going on in Walmart and how this affected other retail names. Let's take a look really quickly. So if you take a look at, let's say, Amazon got hit hard on that. A lot of the kind of the like Etsy, anything that was pretty much online, pretty much got hit hard off of this. And so continue to watch, like even apparel, like AEO got hit hard on this. So I'm going to continue to watch how these kind of work. You can see Macy's down big today also. So department stores getting hit hard off of this. We'll continue to watch to see if these can come back. But really, department stores right now are not looking the best. DBS, Dillard's coming down also. So keep your eyes on these. It's definitely going to affect. And one of the things that happened here was the flip, right? If you pay attention, you saw retail sales came in last week, and it was actually a good number, right? We were having a positive outlook on the stocks after those retail numbers came out. Here you guys are seeing the flip right back down. And so just be careful as you're seeing Walmart. We got some other pre-announcements, right? It wasn't only those, also Shopify coming in here and pre-announcing, telling us that it's going to lay off 1,000 workers. And this was already affecting Shop because Walmart was already hitting Shop. And then the news hit to take it down a couple more legs. Take a look here at the Shop chart. It's been trying to balance out here around, let's say, the 30 50s. Has a lot of support down there towards the 30 13s. We'll see if 30 can hold here, but definitely taking a hard hit after they say they're laying off 1,000 workers or a 10% of its employees. CEOs says job cuts across units, including sales and recruiting, says he is wrong that the pandemic e-commerce boom would last. And so one thing to note here is the laying off of employees, right? We're trying to pay attention. Do we get a soft landing or not? Could the Fed essentially destroy the good jobs market that we have with the moves that they keep pulling? That's why a lot of people are paying attention to the jobs numbers. And I'm starting to catch some of these headlines. It's telling me that we might see a surge in unemployment. This is something to keep on watch for everyone on out there because we don't want to fight the Fed. Now, another thing to note here is the statement that the pandemic e-commerce boom would last. This is the CEO pretty much telling us that the trends that they see going down the line are pointing to the downside, not an immediate bounce back to where they were during the pandemic. And Shop was a complete monster, right? It was ripping through everything. If you take a look at the daily, this got all the way up there towards 170. Shopify tried to hold those gains, then came down really quickly, found the bounce there at the 70s. This could easily be right back down into the 17 and 20 handle, stock that was up there towards 170. We don't want to see it get down there, but this looks very bearish to me. Looks like it wants to take that next leg down. We'll see what happens there on Shopify. All right, let's get out of Shopify. Let's go ahead into what was hot and what was not. Let's dive on in. This is where we take a look at rotation. This is important to kind of keep an eye on the herd. What I always talk about is this is an intraday rotation, but you also want to be watching how the weekly rotation is happening because you might see that some stocks or sectors come from the bottom, like it could be the weakest sector today, and then all of a sudden the next day it's the strongest sector. So just keep that in mind, and let's go ahead. Let's take a look. Strongest sector today is going to be utilities. Utilities leading on up. What was there? Well, let's take a look. Stocks like in regulated electric, like Duke, having a good day today. Also, you saw SO. If you looked at it yesterday, this was one of our leading industries during the show. It eventually ended up a little bit down, but the leading industries were kind of regulated electric stocks like Duke, SO. You could look at Dominion Energy, Excel Energy. Look how that's been performing the last couple of days. But we also got regulated gas stocks to make a move. So these are natural gas stocks that I would keep on watch, right? So like CNP is one that I'm going to watch. If I'm going to watch natural gas, maybe I just want to look for some other plays, right? And you can see here, this is starting to come back up. It's trying to get through that 30.50. If it could get through there, we'll look for that next step up to 32 and could have a breakout. This is Center Point Energy. Keep this one on your radar. Another one you guys can watch is ATO, Atmos Energy. We're still in kind of what was hot. We're taking a look here to see if these can continue pushing. But definitely, I like these charts. These are setting on up for nice little moves to kind of break on out. You can see here the trend line held that little push, held that 114. That's where I'd be looking for pullbacks towards 114, maybe slightly below that. But this looks like it wants to get towards the 120s. Another one you can watch here, NI. Look how these are all setting on up. And when they all set up in an industry, I definitely want to keep an eye out on this industry because it could take that next leg up. Another one here, Southwest Gas Corp. All right, going to go ahead and continue moving forward. Let's take a look at what was not hot here. What was not hot was technology and consumer cyclical. Now it looks like energy coming in, joining the party on the pullback. But let's talk a little bit about technology. What got hit hard here? Again, another theme that I'm going to point out. Software applications, 2 days in a row, getting hit hard on the downside. What are those kind of names? Well, you'd be looking at it like Unity Software. You'd be looking at Snow. You'd be looking at Salesforce. You'd be looking at some of these names that have high kind of names. Software infrastructure also coming down. Oracle getting hit hard. Adobe getting hit hard. A lot of these growth names just taking hard hits to the downside. Even Intuit coming on down. Software application names. So keep these on your radar as we continue to see these getting hit hard. Team getting hit hard. A lot of this also led to the downside by Shopify. Of course, Shop getting hit hard there and continuing the downside action. So to me, I would kind of be worrying about these as you're seeing them continue to get hit. B-Dog. We talked about these yesterday on At the Close. These definitely were not hot. And we're talking technology sector and the industry that we're pointing out, software applications. Remember Asana? Look at that, guys, right back down. Even though it was trying to bounce, trying to get back up there, continuing the leak. So just be careful on out there. And of course, right behind software application was software infrastructure. So some bigger names also taking a hit. That's where you'll find Microsoft's chart. Look at that chart going into earnings today. I don't know about you guys, but this is as bad as it looks here for daily charts. At least for Microsoft and Google, they do not point to me in any sense, in the bullish sense, at least technically wise, right? We never know what can happen and show up in the earnings and the fundamentals and the story kind of change. But for right now, the technicals are pointing to the downside. We'll see what happens in these stocks. Of course, other stocks that are coming down here today, consumer cyclical. What is the industry getting hit the hardest? Apparel stores. So I'm going to really quickly run through these names. I'm not going to go through levels, but I just want to call out a couple of names here, just taking a hard beating. And it's not a couple, it's a lot. So you guys can see these are aligned by capitalization. So the big cap ones first, TJX, Lululemon, Ross, BBWI, Gap getting hit hard, Boot, Alliance, AEO down about 8%, Urban down about 4.8%, Guess down about 5%, Designer Brands getting hit hard, ANF. So many of these just getting hit to the downside. So just be careful. It's definitely in apparel manufacturing, and department stores just getting a beat down. KSS down 7% now, down towards 26.90. Let's get out of what was hot and what was not. Let's continue going here. I do have an interview that I could play that was from yesterday, or I could get through all the earnings. So guess what? Today, I'm going to do something special. I'm going to let you guys in the chat determine what comes on next. Do I go ahead and play a replay here? The replay, of course, would be coming from yesterday's interview of Shawn, Cruz, head of trading strategist at TD Ameritrade, where we talked about inflation. We talked about a certain couple of questions. I'll actually even give you some of those right now. I have them right here. We talked about the bottoming. Is this just a dead cat bounce? What do you expect to see in winter and and energy. Let me know if you guys want to see that. You want to see the replay, put a 1. If you just want to go through earnings stock and look at earnings that are moving forward, throw up the 2 in the chat. I'll catch it, and we'll go ahead and continue moving forward. All right, let's see what happens. Do you guys want the earnings, or do you guys want the replay from yesterday on, of course, Shawn Cruz, head of trading strategist? Looks like I'm seeing some 2s and earnings talk. I'll give it a couple more seconds just to come on through. There's the 2s. That's what I expected. So let's go ahead. Let's dive into the earnings. Let's do it. All right, let's go into these. First one we're going to talk about, of course, was NXPI. Let's get into that one. That's NXP. Oh, it's NXPI. That would make sense. NXP Semiconductors getting on back up there. This one was actually doing pretty decent when the earnings report came out. But the problem here that happened is that Walmart came in and just hit this right back down. And you could see it bounced today. Even though in pre-market it was leaking, it was putting on up in the after hours, then leaked, now came back here towards the 180s. That's the level to keep on your radar for NXP. Adjusted EPS coming in at $3.52, beating the $3.35 estimate. Sales at $3.31 billion, beating the $3.27 billion estimate. NXP Semiconductors sees Q3 sales at $3.35 billion on the low end, high end $3.5 billion versus the $3.3 billion estimate. You guys are seeing a good day there from NXPI. Let's continue going. I'm not going to spend too much on that one. What that one will affect is showing us that semiconductors holding on a little bit here. We'll keep watch to see what earnings come out later in the week, and do those send us to the downside. All right, let's continue going. The UPS coming in here. Let's take a look at UPS. How's it trading on the day? Pulled back here from the pre-market action. And let's talk a little bit about their numbers here. United Parcel Service Q2 EPS beating here at $3.29, beating the $3.16 estimate. Sales at $24.8 billion, beating the $24.62 billion estimate. UPS reaffirmed full year 2022 revenue guidance of $102 billion. And they also raised their targeted share repurchase to $3 billion for 2022. So all positives there. As you guys can see, the daily chart's pointing actually looks like a little bit of a bearish move there to the downside. We'll see if it comes back towards the 170. My biggest concern about UPS is what's going to happen in the winter. Are we going to have the same holiday seasons that we normally have, where people are buying a whole bunch of goods and seeing them delivered? Or are we going to be in a really bad recession by the time winter comes around and you're not seeing so much of the purchase? You're not seeing so many deliveries. That's the concerning sign for me in UPS and FedEx. So I would just watch them both, see how they perform. Right now, I don't have an edge here. The only thing is I can see some headwinds in the future. All right, let's get out of UPS. Let's go to General Motors here. GM reporting this morning, and this was a surprise for me. I don't know if it was a surprise for you guys, but let's take a look here at General Motors. It's actually pulling on back here after EPS missing here at $1.14, missing the $1.30 estimate. A lot of that based on vehicles that they built that don't have the semiconductor chips, so suffering on some supply issues. Sales at $35.76 billion, beating the $34.59 billion estimate. They did say that they started battery production starting in August at their Ultium Cells, a manufacturing plant in Ohio. I think this is important. Of course, this talks about the EV capacity in North America and plans to build 400,000 vehicles in the course of 2022. It also did a good partnership here with Laviant. Laviant, of course, is a lithium player, and General Motors announcing a significant multi-year sourcing agreement in which Laviant will supply General Motors with battery-grade lithium hydroxide. And they also confirmed here that they do have the battery materials needed to build 1 million EVs a year by 2025. So definitely something to catch on, something to keep watch how GM develops here. Right now, I don't think it's the time But I think coming on up, you're seeing more and more mentions of what we're structuring and strategizing towards the EV movement. Is it right now? I don't think so. But is it coming? Yes. And so, like always, we want to go ahead and skate to where the puck is going, not where the puck is. You'll hear that analogy in hockey. I don't know if you guys are hockey players, but the biggest thing there is let's focus on what does this mean moving forward for the next couple of years. We want to watch EV. We want to watch the things behind EV and make sure that we catch those themes as they keep developing. So this could be a time where you're getting stocks at a discount. They're going to be a part of that theme. Let's continue going. Let's go into McDonald's. Take a look there. Let me know in the chat if any of these catches your radar or any of these stocks is a story that you're keeping a track on. Smash the like, guys. I hope that you guys are enjoying today's show. Let's see if we can get to 200 likes today. Want to continue pushing forward. Who wants a sundae from McDonald's? I know I do, and that chart does too. McDonald's pushing on up here, not fading away one bit here. You guys can see McDonald's didn't even take some power hit on the downside today. It held the support there around the 249, pushing right back up there. EPS coming in at $2.55, beating the $2.47 estimate. Sales at $5.72 billion, missing the $5.82 billion estimate. But McDonald's does not turn around. And when Ronald McDonald's wants his fries, he gets his fries, baby, because it's getting on up there. A nice little chart on the weekly. Take a look how that's just trying to get passed through here. You can see the trend line that you broke out from. You held on the pullback today. So now if 245 holds, I'm bullish this chart, especially around the 260s. Once you get into there and hold any pullbacks towards, let's say, 255, this does look like it's trying to get up there towards the 270. Doesn't look bad for a lot of stocks that are, in bearish territories. This one has the 50 and the 200-day below it and the 9 EMA below it. Try to find stocks that have that and definitely let me know because I want these on my radar for the bullish side upside move. All right, let's continue going. Ice cream machine is always out of order. Shannon, no, you got to get your caramel sundaes. Or maybe you're a fudge person. Who knows? All right, let's continue going. Let's take a look at some other earnings. We got General Electric up after this. Let's continue going. We do have an interview that's going to be coming up at 1:45. At 1:45, we got Louis Navellier, chairman and founder of Navellier Associates. So don't miss that. We do still have an expert interview coming right up in just about 15 minutes. So I'm going to keep going through these earnings. Got some other stories to go through. If one of these is catching your radar, store it up in the comments and we'll go ahead and expand on it. Let's get into General Electric here. GE, what's going on with General Electric? So Q2 EPS here coming in at 78 cents, beating the 38-cent estimate. Sales at $18.64 billion, beating the $17.6 billion estimate. Now, an interesting note here, of course, is their Q2 free cash flow fell to positive $162 million from $199 million last year, but beat the outlook that was actually for negative $806 million. So to me, I think this is one of those flips where you expected a negative in the cash flow. You got a positive in the cash flow. And this actually gave it some lift here into the gates. It tried to hold the breakout of 72. It's pulling back right now. We'll see if it can hold that 72 breakout resistance. You guys can see it drawn right there. You see right in this area, it's trying to hold that pullback. We'll see if it's able to hold that. If it does break back down to 70, that could be a sign of concern. As you can see, it just break back down and get back to the 68. Would want it to hold 71, 72, get back up there through the 74. Daily chart has a nice candle put in. Just be careful. You will get into some resistance as you get into the shadow zone. Look for the shadow to fill first. So I'd be watching the move into that. So the high here, close of, we got 72.82. That's going to be the beginning of the kind of the shadow zone. Then look for a move back up towards a low of 74.75. Doesn't look too bad right now. General Electric. All right, let's get out of General Electric. Let's go get some refreshment and get a Coke. Who's a Coke fan in the chat? Throw a 1, or actually, you know what? Throw a KO in the chat if you're a Coca-Cola fan, and throw a Pep in the chat if you're a Pepsi fan. Let me see what you guys got. You guys Coke fans or Pepsi fans? Well, I'll give you the numbers while you guys go ahead and let me know about your opinion in the chat. Let's take a look at some of these numbers. Coca-Cola coming in with an EPS of 70 cents, beating the estimate of 67 cents. Sales at 11.3 billion, beating the 10.54 billion estimate. Updating full year guidance. Coca-Cola sees full year 22 revenue growth now at 12 to 13%. And getting a nice little lift here today, going right towards that trend line. I had that trend line drawn before. I created this on May 13th. I was already looking at this, and that was back here, guys. And so all I did was just connect the trend line. I updated this today updated this on the 22nd. So from essentially the 22nd, we were looking for that move back on up through. And that was on Friday. So we were looking forward to seeing if it was going to get there on the earnings. And boom, you're there, guys. 64 is the next stop. After that, it's 65. We'll continue to watch how Coke performs. Look at the intraday action. Nice little cup and handle type. I'd be looking for a little pullback to 63.49 to holds and then gets back through that 64. It doesn't look too bad on the 15. Let's take a look at the 5. You can see that it was trying to get through that 63.72. Pulled back. Now it's really trying to get through that on the next leg up. All right, let's get out of the Coke. What did you guys think? Let me take a look at some of those votes. Navellier, I see you guys excited. Let's go. All right, Coke. Looks like Coke is getting the win there. You guys know, hell, Coca-Cola all day. Gin, says my man Bill. Maybe some Coke and gin. I don't know about that one too much, but hey, I'm more of a Sprite and gin kind of guy, but hey, who knows? Like France, right? A little Sprite. There's Coke, though. It's still Coke if it's Sprite, right? So we'll see what happens there. Oh, I got one Pepsi fan out there. Well, you might be the only one drinking Pepsi, but definitely Coke. And Sprite is also Coke. I agree. All right, let's get out of Coca-Cola. Let's take a look at 3M. Let's take a look at 3M as they announced also that they're going to be splitting part of their business with the healthcare business spinning off. So watch this if you're an investor. If you're an investor in 3M, maybe you want to do a little bit deeper dive how this is really going to affect the business, the spin off of the healthcare. Now, EPS coming in here at $2.48. Adjusted EPS beat the estimate of $2.45 estimate. Sales at $8.7 billion, beating the $8.58 billion estimate here. They did cut their full year 2022 adjusted EPS guidance here from $10.75 bottom range, $11.25 on the top range, to $10.30 on the bottom range, down 45 cents there. And then to a high range of 1080. So a little bit of room there, but still towards the lower end. The estimate is around 10.6, cutting the EPS here. And it doesn't look like we got the biggest, reaction, but this was actually up in pre-market. I think a lot of this based on the spinning off of the healthcare business, but keep this one on watch. Let's take a look at the daily candle. Look how this really just pushed on up there, already filled the gap. And so you already filled this kind of shadow zone. So with that being said, it needs to get back above that shadow zone and close up there for me to think that we're going to get bullish. So that's a close above 144.14. Right now we're at 142s. So it needs to close up there towards that 145 to stay in the bullish sense. If not, I think this will eventually just retrace some of these gains, but keep on watch. Who knows in 3M. All right, let's go ahead. Let's keep on going. Definitely Coke over Pepsi was the consensus in the chat. I see you. Dasani. Oh, man, I can't drink that water if you paid me. But let's keep going. Let's go take a look at the last earnings. Well, we got two more earnings stocks that we're going to touch. Let's go to Raytheon Technologies. And so RTX getting that pullback here in the kind of when they released it, they just sideways now. Let's take a look at their earnings here. Q2 EPS beating at $1.16, beat the $1.12 estimate. Sales at $16.3 billion, missing the $16.6 billion estimate. Raytheon Technology affirms full year 2022 guidance, confirms sales, confirmed repurchase of at least $2.5 billion. So it's getting a little bit better, but really what's hurting this is just the outlook in kind of aerospace and defense. It's just not in the hot names today. I'll talk a little bit about some more space theme items hitting the news catalyst, but it's just not the favorite right now. You can see here it was holding. Now it looks like it's heading towards that 90. We'll see if it breaks down and gets through the 89 on the downside. Last one I wanted to touch was Archer Daniel Midland. Reason why is that it's in the farming products. I was taking a look to see what was happening on this stock today. I like the pullback here towards 77. We'll see if it can get back up there towards the 80, towards the close. And the Q2 EPS coming in here at $2.15, beating the $1.71 estimate. Sales at 27.28 billion, beating the 25.16 billion estimate. Definitely getting that lift here. We'll see if it can get another drive on up. I was watching this to see what other farm products were going to move. Of course, a lot of these were getting hit because discount stores were down big. But if you take a look here, farming products, we're not doing too bad. ADM's up about 3%, BG up about 1.37%, IBA about 1.52%. But to note, TSN is kind of sideways here. We'll see what happens on ADM. All right, getting out of the earnings stock. I hope that you guys appreciated me going through there. How many earnings stocks did we touch? We touched 1, 2, 3, 4, 5, 6, 7, 8, 9 earning plays right here on Stock Market Movers. Where else are you guys getting that kind of coverage? I want to know, because that's what it's all about. I'm trying to keep you guys in the informational edge right here on Stock Market Movers. Coming on next, in just about 5 minutes, we'll get into our interview with Louis Navellier, chairman and founder of Navellier and Associates. We'll talk about what's going on up, what's coming up, right? We'll talk about Walmart profits getting released early. What should happen in retail sentiment now? We'll talk a little bit about the Fed. And is there anything safe in this market? We'll find on out with Louis coming on up in just about 4 minutes. All right, let's go ahead. Let's continue going. Let's talk a little bit about Coinbase here. Coinbase is very important. Of course, we've been seeing how these kind of crypto platforms have been struggling. It's falling big today. A lot of this based on the SEC probe news that was released, whether the platform is offering unregistered securities. So you guys are seeing coin down big after that recent push that it made up there towards the 80. It's already back down to 56. Just to kind of put it in perspective, from Wednesday to now, it's down about 28%. This, of course, coming after SEC Chairman Gary Gensler said that many of these underlying tokens have their attributes of security and need to be regulated as such to protect investors. This, to me, red flag all over it. I'm going to call it right now. Who knows what can happen to Coinbase moving forward? I'm not here to try to spread fear, but I can tell you right now, that is a huge warning sign to me. If I was an investor of coin, I'd probably be out. But of course, you guys make your own risk assessment. Reason why I would be out: consistent downturn in the catalyst of Bitcoin and these coins overall. What positive have you heard in the last week or so from these platforms? Have you heard anything positive? I know I haven't. I've been hearing nothing but issues with platforms, issues with investors' money being tied up. And I don't know about you guys, but I don't play those games. The SEC did write in recent filings that a digital token or crypto asset is a crypto asset security if it meets the definition of a security, which Securities Act defines to include investment contracts if it constitutes an investment of money in a common enterprise with a reasonable expectation of profit derived from the efforts of others. So if there's potential of that return on investment, that itself could be deeming it a security. So keep this on watch. I'm not going to go into which token is a security, which token isn't, but this is going to be major concerns, not only for Coinbase, but also for some other platforms out there. I am staying completely away from crypto in this environment until it gets through this winter and really gets hit hard. I'm just staying away from it. Keep it away from me, guys. I don't know what can happen to Coinbase from here. I don't like the upside. I think you could potentially see Coinbase in the teens. So I'm not going to go ahead as so far into shorting it, but I definitely want to stay the hell away. All right, we'll see what happened. I'll see what you guys are talking about in the chat. If you can't trust the leadership to handle its internal issues, battle through the hard time, the company is doomed. That came from Matthew, and I couldn't agree more. I'll just stay away from it. All right, let's get out of Coinbase. I did want to touch another news before we get too far out of there. Let's take a look at SPCE. I wanted to see if it was affected today. Why would SPCE could be coming down? Well, we got some space news. It wasn't really the biggest news, but Russia opting out of the International Space Station after 2024 to build its own outpost. So you could see some space names being hit right now off of that. I'm not sure if this is going to continue the downside or not, but something definitely to keep on watch. All right, guys, in a few seconds, we're going to be diving into our interview. Smash the thumbs on up. Can we get to 200 likes today? I'm going to go ahead and play a quick little trailer for Benzinga Pro, and we'll be right back to continue here.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, traders, let's go ahead. Let's keep it going here. Let's see what's going on out there. Utilities still on up. Technology still leading to the downside, followed by consumer cyclical and energy turning to the downside there. We'll continue to see. Looks like we're having a little bit of issues with our guests. They should be here in just a few moments. So you guys get a little bit of extra time. Smash the like. If you guys got some tickers you guys want me to check on out, now's your chance to go ahead and throw it on up. Normally during the show, I try to stick to the headlines to get us through everything in a 1 hour period. Now's your chance to go ahead and throw up a stock. If it's on your radar, let me know. I'll go ahead and cover it. Looks like Super SPAC Man calling out a Kathy favorite that I've been seeing, looking like it wants to get through 100. Let's take a look at the chart. Zoom, zoom, zoom. Looks like that. Look how it rejected that 100 breakdown here. It went to 100.01. I've been looking at this one when it started breaking here from the 110 area. I could tell that it was looking like it wanted to get to the 100 and then going down below it towards the 97 support. You could see it here. It's just looking like it wants to break down and come on down there. It is breaking down there towards the 100. Maybe you look for bounce backs, but how did the Zoom video really save itself from here? I don't know. I think you're going to see a lot of mentions of competitions getting some market share in this space. It's not something that I think is sexy anymore. There's so many competitors in video conferencing, And there's a lot of different companies that are coming in there and either doing two things. They're either providing a service that's just a little bit less of value than Zoom for free, or they're charging a lot more, like let's say Cisco. And what are they doing? They're charging more because they can go ahead and keep some of those high-end customers. So where does Zoom fall in that market share? Are they going to be able to continue to grab, right? I know that we've saw mentions that they've shortened the free conferences. That's what a lot of people were using. And so in my eyes, Zoom right here, the story is turning to the downside. Fundamentals are turning to the downside. And I just don't know if they can hang on. And at least for me, I'm not a Zoom fan anymore. I've been in their conference recently and I got booted out multiple times. That might have made me a little bit more bearish, but it just showed me that what are the competitive advantages here that Zoom offers? There's not many, at least competitive over their other competitors, that they're doing something different that others cannot. All right, I'm going to get on out of Zoom. It looks like we're going to get into our interview. I know you guys are excited. I saw you guys in the chat mentioned earlier. So let's go ahead. Let's dive right into our interview with Louis Navellier here. Let's bring him right on. Welcome back, Louis. Appreciate you coming on, the chairman and founder of Navellier Associates. Welcome back, Louis.
It's good to be here.
All right, let's dive on in. I'm sure that you were, like many, surprised yesterday when Walmart pre-announced their into their profits. What did you see that really shook up retail?
Well, I haven't been too surprised. You got to realize that the average customer at Walmart is kind of a low-income person, so they have actually a paycheck cycle. Their sales are stronger in the beginning of the month and the middle of the month. So that's always been their customer base. Target has a little more affluent people, but something like Costco got hit today. Costco caters to very wealthy people. The average Costco person's pretty well off. So, and then you had a report from Louis Vuitton today that their sales are fine. So this is really a class thing. And I'm not saying the upper middle class aren't hurting, but I think it's a gross overreaction.
Yeah, it looks like we're having a mixed bag, right? I mean, if we looked at those retail numbers that came in a week and a half ago on that Friday, it was pointing towards the upside. It looked good. We keep getting inventory issues. That's what at least I'm seeing out there from some of the cheaper names. Even Target ran into the issues. Now let's take a look here. What do you expect moving forward from the earnings? What are you seeing? Are any trends here that are standing out to you, Louis?
Well, obviously you have the big techs announcing after the close, and we want to see if the dollar's impeding them in any way. Microsoft earlier warned that a stronger dollar is going to impact their bottom line. Apple, of course, is very dependent upon China, and GM disappointed today because their sales dropped 36% in China. And a lot of people are making a big fuss. The Apple's having a special iPhone sale in China right now. So we want to see if China is going to impede any of these multinationals. I'll be honest with you, the oasis remains energy. Obviously Putin's doing this thing in Europe, creating chaos over there, and with restricting the Nord Stream to 20% capacity tomorrow. So Germany and some other European countries are not happy campers. I have plenty of food stocks. I've already had one chicken stock have very good earnings and guide higher. I got another chicken stock that will announce soon. That's Pilgrim's Pride. So we got to be really careful, but it's energy, food, fertilizer. I do own a lot of shipping stocks that are profiting from all the bottlenecks, and I do have a few, especially semis. But yeah, the big techs it's going to be interesting. The market's getting more narrow.
Of course, where all eyes are going to be on those big tech earnings, and we can talk about that. I think you mentioned something that was interesting there is having a couple of, farm products exposure, right? I saw ADM come in today, decent report there. How do you expect food moving forward in farm products?
Well, ADM is one of my stocks I should have for disclosure reasons, but I was very happy with its results. But yeah, the heat wave is creating havoc. It killed a bunch of chickens in Miami. It's killing a bunch of cows. It's hurting a bunch of crops. So even though Ukraine is starting to export its wheat, We think food prices are going to remain very high, and the inflation focus may turn more to food and less off of energy, because energy prices are going to decline come September, October, because worldwide demand will drop.
Definitely. Now, one thing on everyone's radar, of course, is the FOMC meeting tomorrow. I've been asking a lot of people to kind of get the sentiment. Do you feel that the 100 basis points is on the table or off the table?
It's off the table. They're going to. I used to work for the Fed, so they're going to do 75 basis points tomorrow. I'm expecting a fairly dovish FOMC statement.
Okay.
I think we want them to acknowledge that inflation is finally cooling, which is we want them to say. And then all the focus will then turn to September. Are they going to do 50 or 75? We've had this huge Treasury bond rally since mid June. The 10-year peaked at 348. I think it's 278 right now. So that's a big drop. And the Fed never fights market rates. So if Treasury yields keep falling, they're only going to do 50 in September, and that's the last rate hike, and then we can all rally.
All right. Now, a question that I think a lot of investors are asking, is there a safe area to look for, dipping your toes in this type of market? I know some people were maybe looking at the defensive area as that. Of course, stocks like Walmart turning around in 10% days to the downside, that definitely brings the worry. Where do you see the safe in this market?
Well, since the market peaked out on November 19th last year, the only place that's up, if I look at the S&P, is the top 10% of stocks with the highest dividend yields. So dividend stocks are an oasis, period. Now, I would add that I would rather have domestic dividend stocks because, again, a lot of multinationals are going to be vulnerable to a strong dollar. I mean, when you have tanks going down the streets of China because people can't withdraw their savings, I think we have a problem, and the U.S. has emerged as the only viable currency in the world right now. So all that money's pouring in, driving our treasury yields lower. But the dividend stocks are the best place to be. Now, that's going to put you heavy in energy. And you got to realize that these energy companies are going to make money at $85 a barrel, as well as where oil is now. So don't be too alarmed if crude oil prices move down a bit lower. But look at what Europe has done for natural gas. We've been exporting it. We've kept the prices high. And of course, natural gas is very dependent upon the winter as well. So, but energy is less cyclical than it used to be.
Yeah, Lewis, do you expect to see continued gains in natural gas, or is this kind of just a spike that might ease off going into winter? I know I'm concerned about the winter months. I know Europe is concerned. What do you see?
Well, I'm originally from Berkeley, California. I'm in Palm Beach right now, but in Berkeley they banned natural gas in all new construction, and they have a bunch of California people in the White House. In fact, NPR said that our natural gas stoves pollute more than all our automobiles. So there is a war on natural gas, but they're going to lose that war because it's even John Kerry says it's a transition fuel. And of course, our gas in America is a lot cleaner than the Russian gas. We clean it up. So I think while the world's burning coal and a lot more coal, I think natural gas is definitely a great transition fuel. We are the Saudi Arabia of natural gas, but it would help if the administration become less hostile to it. There were a lot of abandoned wells in southwestern New Mexico when they did the drilling ban. Of course, that got overturned by a federal judge. Everybody's starting to reactivate those wells. But it was very tragic for months. Just natural gas and methane was pouring in the air because of the drilling ban. I don't think the administration intended that, but that was what they did. And so we'll see what happens. But it's obviously the transition fuel right now.
Something to watch. We'll definitely watch the situation on natural gas. Last one I'd leave off of is an earnings coming up that has my eyes, just because I feel like the story has been changing recently. What do you feel about Boeing?
Well, Boeing's defense business is supposed to be down, okay? And the analysts have slashed its estimates from positive to negative here. So I really don't expect a lot. Obviously, they should be selling lots of planes. I was at Newark Airport on Sunday, and all I can tell you, it was a refugee center. It was total chaos. And so I do think Boeing might miss, though, because of the analyst cuts. And so we'll see what happens. But everything's guidance now. You can miss as long as you guide higher. And so if they get a lot of commercial aircraft orders, then the stock will come back up.
Forward earnings you're pointing at, right, Lewis, focusing on how that's going to react in the stocks with that guidance, seeing a lot of stocks kind of guide lower in 2023. That's what Walmart did earlier today. So looking for stocks to point towards revenue growth coming into 2023 is something we should watch.
Yeah, I want to be very clear. I have no sales momentum problem. I have no earnings momentum problem. I have even no valuation problem. I mean, in large cap, I'm at 8.5 times next year's estimated earnings. In small cap, I'm at 4.3 times next year's estimated earnings. I mean, the market overdid it. Okay. When the yield curve inverts, it's usually a good buying opportunity, but sometimes it takes 3 months for the market to figure that out. So if history repeats and everybody wanted to wait for a safe time, you could do September 21st, the last Fed rate hike, or maybe you could do early October before the next round of earnings. But I do think the market's washed out. But I'm only energy, fertilizer, food, shipping, and especially semi. I just don't have the exposure to the consumer stocks. I do own Costco in some of our dividend accounts. But I think it's going to be fine. I think it's grossly overdone. We had consumer confidence come out today. It wasn't that bad from the conference board. They're much more optimistic than the University of Michigan, although confidence did drop.
Well, thank you, Louis Navellier, chairman and founder of Navellier Associates, and pointing that we are closer towards the end than closer to the beginning. Appreciate you going ahead and coming on today, Louis.
Thank you.
Have a great day. All right, guys, that's going to do it for us here on Stock Market Movers. I hope you guys had a great show today. We had a lot to talk about. We covered pretty much everything on the list here. We did the Fed outlook, natural gas, retail destruction, Shopify, earnings from NXP, UPS, GM, McDonald's, Coke, 3M, Raytheon, Coinbase we talked about, inflation, and the rest of the week outlook. Keep your eyes out. We'll continue watching, and I will be back here tomorrow and later today on At the Close, but definitely we'll keep watch. Tomorrow at 2 p.m., right when the show ends, we'll be getting the release there from the FOMC meeting, and then at 2:30, beginning the conference. You guys could catch that conference right here on Benzinga, just like you guys can catch the earnings that will be on earnings calls later today from Google and Microsoft. We'll see what happens. A lot of it's going to depend on what happens with those two major stocks. Do we open up green tomorrow or do we open up red? We'll see what happens. Hit the thumbs on up before you get on out of here. Let me know what you guys like about this show or what you don't like. I'm trying to keep it fast-paced, get to all the headlines, and, of course, keep you guys in the informational edge. Up next, you guys got some roadmap action. Get you guys on over to our new crypto channel. Yes, I said it, guys. New crypto channel. We've been building this up slowly, so you might see some action that's already been on there. But come on over. Check out the roadmap. It's coming on right next.